Gold is a unique element. It is known in the world of science by the symbol Au and the atomic number 79. This dense, shiny, and bright yellow precious metal has captivated humanity for thousands of years. Its beauty is matched only by its remarkable properties. Gold does not rust or tarnish, meaning its brilliant luster never fades. It is also incredibly malleable and ductile. This means a single gram of gold can be beaten into a thin sheet covering 1 square meter or stretched into a wire over 2 kilometers long. This blend of permanence and workability makes it unlike any other metal found on our planet. The applications of gold extend far beyond its use in beautiful jewelry and revered coins. Its excellent conductivity and resistance to corrosion make it a vital component in modern electronics. You will find tiny amounts of gold in your smartphone, your computer, and even in the advanced systems that guide spacecraft. In medicine, gold compounds are used to treat certain types of arthritis, and radioactive gold isotopes are used in cancer diagnostics and treatments. Dentists have also used gold for crowns and fillings for centuries because it is non-toxic and wears well. Gold's utility is therefore as practical as its beauty is profound, securing its place in both our hearts and our technologies. What truly sets gold apart, however, is the universal value humans have assigned to it. Since ancient civilizations, it has been a symbol of wealth, power, and divinity. Kings were crowned with it, gods were worshipped in idols made of it, and empires were built on the pursuit of it. This shared belief in its worth has turned gold into a reliable store of value. Unlike paper money, which can be printed endlessly by governments, the supply of gold is finite. This scarcity, combined with its physical durability and long history as a medium of exchange, gives it an enduring appeal that transcends cultures, borders, and generations. This special status makes gold a fundamental part of the global financial system. It acts as a safe haven asset, a place where investors, individuals, and even entire nations turn during times of economic uncertainty. When stock markets tumble or currencies weaken, the price of gold often rises. It is seen as a form of financial insurance, a tangible asset that holds its value when intangible ones fail. This psychological and economic role is just as important as its physical properties. Gold is not just a metal, it is a story of human desire, a measure of stability, and a constant in a world of constant change. The story of gold prices in India is a dramatic narrative of economic change, policy shifts, and global events. Let's start in 1964. Back then, under the Gold Control Act, owning gold bars and coins was illegal in India. The government wanted to curb gold imports and protect its foreign exchange reserves. The official price was a mere 63 rupees per 10 grams. However, a thriving black market existed where prices were much higher. This era was defined by control and restriction, a government attempt to break the nation's feverish demand for the yellow metal. It was a time when gold was precious but also forbidden, making its possession a quiet act of defiance against state policy. The landscape began to shift dramatically in the 1990s. The landmark economic reforms of 1991 dismantled the old license Raj system and opened India's economy to the world. The Gold Control Act was repealed in 1990, liberalizing the gold market. By 1995, the price had climbed to around 4,700 rupees per 10 grams. This was not just about inflation, it was about integration with the global market. For the first time, Indian gold prices started moving in tandem with international trends. The dot-com boom and a relatively stable global economy kept prices steady, but the foundation for a new market-driven era for gold in India had been firmly laid. The new millennium brought unprecedented volatility and a steep upward climb. The 2008 global financial crisis was a major turning point. As trust in banks and paper currencies collapsed in the West, investors worldwide fled to the safety of gold. This global surge pushed prices skyward in India as well, crossing the 12,500 rupees mark. By 2012, amidst the European sovereign debt crisis, prices had soared past 32,000 rupees. This period cemented gold's reputation as the ultimate crisis commodity. For Indian households, their traditional savings in gold suddenly looked like a brilliant investment, validating centuries of cultural wisdom about the metal's reliability. The period from 2015 to 2025 saw prices continue their ascent, driven by a new set of factors. Geopolitical tensions, including global trade wars and regional conflicts, kept demand high. The economic disruption caused by the COVID-19 pandemic in 2020 sent investors rushing to gold once again, pushing prices above 50,000 rupees. By early 2025, with persistent global inflation and ongoing geopolitical instability, the price has stabilized at a new high, hovering around 72,000 rupees per 10 grams. This journey from 63 to 72,000 is not just a story of numbers. It is the story of India's economic evolution and its unbreakable connection to the world's most cherished metal. The story of gold begins not on Earth, but in the fiery hearts of dying stars. The elements we see around us were forged in the universe's most extreme environments. Lighter elements like hydrogen and helium were formed during the Big Bang. Heavier elements, up to iron, are created through nuclear fusion inside stars. However, creating elements heavier than iron, like gold, requires an even more spectacular and violent event. The immense energy needed for this process is only found in the cataclysmic explosions of supernova, or, as scientists have more recently discovered, in the collision of two neutron stars. These are the dense, collapsed cores of massive stars that have already gone supernova. Imagine two of these incredibly dense neutron stars, each packing more mass than our sun into a sphere just a few kilometers wide, orbiting each other. As they spiral closer, their immense gravitational forces rip them apart, culminating in a collision of unimaginable power. This cosmic crash, known as a kilonova, unleashes a torrent of energy and matter into space. It is within this chaotic, high-energy environment that atomic nuclei are bombarded with neutrons, rapidly building up to form the heaviest elements, including gold, platinum, and uranium. In essence, every atom of gold on our planet is a piece of stardust, a relic of an ancient, violent cosmic event that occurred billions of years ago. After being forged in these stellar cataclysms, this precious dust traveled across the cosmos for eons. Eventually, it became part of the massive cloud of gas and dust that condensed to form our solar system, including our planet Earth, about 4.5 billion years ago. During Earth's early molten stage, heavier elements like iron and gold sank towards the planet's center, forming its core. This is why the vast majority of Earth's original gold is located deep within its core, completely inaccessible to us. The gold we find today in the Earth's crust and mantle is believed to have arrived later. This accessible gold was delivered to the Earth's surface during a period called the Late Heavy Bombardment, around 4 billion years ago. During this time, the planet was pelted by asteroids and comets, remnants from the formation of the solar system. These celestial bodies were rich in heavy elements, including gold. As they crashed into our planet, they deposited these metals into the upper layers of the Earth's crust. Over millions of years, geological processes like volcanic activity and the movement of hot, pressurized water through rock fissures concentrated this gold into the veins and deposits that we mine today. So the gold we wear and value is truly extraterrestrial treasure. Finding and extracting gold from the Earth is a complex and challenging process that blends geology with advanced engineering. Geologists first identify potential sites by studying rock formations, soil samples, and using satellite imagery. Once a promising area is located, exploratory drilling is done to take core samples. These samples are analyzed in a lab to determine the concentration of gold in the ore, measured in grams per ton. If the concentration is high enough to be economically viable, a mine is established. The two main types of gold mining are placer mining, which collects loose gold from riverbeds and sands, and hard rock mining, which extracts gold embedded within solid rock. In hard rock mining, which accounts for most of the world's gold production, massive machinery is used to break up and excavate the ore. This can be done through open pit mining, where a large pit is dug from the surface, or underground mining, where shafts and tunnels are created to reach deep deposits. The excavated ore, which may contain only a few grams of gold for every ton of rock, is then transported to a processing plant. The first step here is crushing and grinding. Giant rotating mills, often containing large steel balls, pulverize the rock into a fine powder. This increases the surface area of the ore, making it easier to separate the tiny gold particles from the waste rock. The next stage involves a chemical process to dissolve the gold. The most common method is cyanide leaching. The powdered ore is mixed with a dilute cyanide solution in large tanks. The cyanide selectively dissolves the gold, forming a gold-cyanide complex that stays in the solution while the rest of the rock particles settle. This gold-rich solution is then separated from the solid waste. While effective, the use of cyanide is controversial due to its toxicity, and mines must follow strict environmental regulations to prevent leaks and neutralize the waste. Alternative, less toxic methods are being developed, but cyanide leaching remains the industry standard for its efficiency. The final step is to recover the pure gold from the chemical solution. One common method is to add zinc powder to the solution. The zinc reacts with the gold-cyanide complex, causing the gold to precipitate or fall out of the solution as a solid sludge. This sludge is then smelted in a furnace at extremely high temperatures, over 1064 degrees Celsius. The intense heat melts the gold and separates it from any remaining impurities. The molten pure gold is then poured into molds to create gold bars, also known as bullion. These bars, often stamped with their purity and weight, are then ready to be sold on the global market, completing the long journey from deep within the earth to a form we can hold and value. Gold prices are not determined by simple supply and demand for physical jewelry or industrial components. Instead, they're driven by a complex interplay of global economic forces, investor sentiment, and government policies. One of the most significant drivers is inflation. When the general price of goods and services is rising, the purchasing power of paper money, like the dollar or the rupee, decreases. In such times, investors often buy gold because it tends to hold its value. It acts as a hedge against inflation, a tangible asset that preserves wealth when currency is losing it. Therefore, when inflation fears grow, demand for gold increases, pushing its price up. Geopolitical instability is another powerful catalyst for rising gold prices. Events like wars, trade disputes, or major political crises create uncertainty in financial markets. During such periods, investors become risk-averse. They sell off riskier assets like stocks and seek refuge in so-called safe haven assets. Gold is the ultimate safe haven. It has no credit risk, it cannot go bankrupt, and its value is not tied to the political or financial fortunes of any single country. The rush to safety during events like the 2008 financial crisis or the outbreak of major conflicts leads to a surge in gold demand and, consequently, a higher price. The policies of central banks, particularly the U.S. Federal Reserve, also have a profound impact. Interest rates are a key factor here. When central banks raise interest rates to fight inflation, it makes holding interest-bearing assets like government bonds more attractive. Gold, on the other hand, pays no interest. Therefore, higher interest rates can increase the opportunity cost of holding gold, leading to lower demand and prices. Conversely, when interest rates are low, gold becomes more appealing relative to bonds, and its price tends to rise. The strength of the US dollar, the currency in which gold is globally priced, also plays a crucial role. A weaker dollar generally makes gold cheaper for buyers using other currencies, boosting demand and prices. Finally, market sentiment and speculation can cause short-term price swings. The gold market is made up of not just physical buyers, but also a vast ecosystem of financial instruments like futures, options, and exchange-traded funds, ETFs. These allow traders to bet on the future direction of gold prices without ever touching the physical metal. Large-scale buying or selling by hedge funds and institutional investors can create significant momentum in the market, sometimes detached from underlying economic fundamentals. This speculative activity adds another layer of complexity, making the gold market a dynamic and often unpredictable environment where psychology can be just as important as economic data. In India, gold is not just an investment. It is woven into the very fabric of culture, tradition, and family life. This relationship is ancient, stretching back thousands of years. From the Indus Valley civilization to the great Mughal emperors, gold has always been the ultimate symbol of prosperity, purity, and social status. This cultural reverence is most visible during weddings. An Indian wedding is incomplete without gold. Brides are adorned with intricate gold jewelry, which is considered Stridan, her personal wealth that she takes to her new home. It represents security, blessings from her family, and a beautiful start to her new life. This tradition ensures a constant, baseline demand for gold across the country, regardless of its price. The religious significance of gold in India is equally profound. It is considered an auspicious metal, a representation of the goddess Lakshmi, the deity of wealth and prosperity. Temples across the country have vast treasuries of gold donated by devotees over centuries. Major festivals like Dhanteras, which precedes Diwali, are considered the most auspicious time of the year to buy gold. On this day, millions of Indians flock to jewelers to purchase everything from small coins to heavy necklaces. This act is believed to invite wealth and good fortune into the home for the coming year. This fusion of faith and finance makes gold demand in India deeply emotional and resilient. This deep-rooted cultural affinity has made Indian households the largest private holders of gold in the world. It is estimated that Indian families collectively hold over 25,000 tons of gold, stored away in the form of jewelry, bars, and coins. This is more than the official gold reserves of the United States, Germany, and the International Monetary Fund combined. For many rural families, gold is their primary form of savings and a crucial financial safety net. It is a liquid asset that can be easily sold or pledged for a loan during emergencies like a failed crop, a medical crisis, or to fund a child's education. It functions as an informal, trusted banking system where banks are often inaccessible. However, this national obsession also presents economic challenges. India imports almost all the gold it consumes, spending billions of dollars in foreign currency each year. This puts significant pressure on the country's trade balance and can weaken the rupee. The government has tried various measures to manage this, such as imposing import duties and launching gold monetization schemes to encourage people to deposit their idle gold with banks. Yet, the cultural desire for physical gold remains powerful. For the average Indian, gold is more than just a commodity. It is a legacy passed down through generations, a symbol of security, and a timeless expression of love and blessings. While individuals and households buy gold for personal security and cultural reasons, nations do so for strategic ones. Central banks around the world are among the largest single owners of gold, holding it in their official reserves. These reserves are assets held by a central bank to back its liabilities and influence monetary policy. For decades, the list of the top gold-holding countries has been dominated by the world's major economies. As of early 2025, the United States leads the pack by a significant margin, holding over 8,100 tons of gold in its vaults, most famously at Fort Knox. This massive hoard is a legacy of the old gold standard system, where the dollar was directly convertible to gold. Following the United States are several other economic powerhouses. Germany holds the second-largest reserve, with around 3,350 tons. The International Monetary Fund, a global financial institution, comes next, holding about 2,800 tons. Italy and France also feature in the top 5, each with over 2,400 tons. In recent years, however, the most active buyers have been emerging economies. Russia and China have been steadily accumulating gold. Russia holds around 2,330 tons, and China officially reports about 2,260 tons, though many analysts believe its actual holdings could be substantially higher. India also ranks in the top 10, with its central bank, the Reserve Bank of India, holding approximately 822 tons. So, why do these central banks buy and hold so much gold? The primary reason is diversification. Most of a country's reserves are held in foreign currencies, predominantly the US dollar. Relying too heavily on one currency carries risks. If the value of that currency falls, the value of the reserves falls with it. Gold, which has no counterparty risk and often moves inversely to the dollar, provides a powerful hedge. By holding gold, central banks can protect their balance sheets from currency fluctuations and market volatility. It is a way of ensuring that a portion of the nation's wealth is stored in a universally accepted asset that is beholden to no single government. Another key reason is to instill confidence. Holding substantial gold reserves sends a strong signal to global markets and citizens about a country's financial stability and the strength of its currency. In times of extreme crisis, whether economic or geopolitical, gold can be used to settle international payments or as collateral for emergency loans when other assets might not be accepted. It is the ultimate asset of last resort. For emerging markets like China, Russia, and India, increasing their gold reserves is also a strategic move to reduce their dependence on the US dollar and assert their growing influence in the global financial system. It is a quiet declaration of economic sovereignty. While holding gold offers nations a sense of security and stability, an excessive reliance on it as a reserve asset is not without significant risks. Gold is often described as a barbarous relic for a reason. It is an unproductive asset. Unlike government bonds or foreign currency deposits, gold does not generate any income. It pays no interest or dividends. A ton of gold sitting in a vault will still be a ton of gold a decade later, with no yield earned in the interim. This represents a substantial opportunity cost for a nation. The capital locked up in gold could otherwise be invested in assets that generate returns, which could then be used to fund public services, infrastructure, or further build up the nation's wealth. Furthermore, the price of gold can be highly volatile. While it is seen as a safe haven, its value can and does experience significant fluctuations. A central bank that holds a very large percentage of its reserves in gold is exposed to this price risk. A sharp drop in the global gold price could lead to a substantial erosion of the value of the nation's reserves, potentially creating financial instability. This volatility makes it a tricky asset to manage. A country might need to sell its reserves during a crisis, but a falling gold price could mean selling at a loss exactly when the funds are most needed. The liquidity of the physical gold market can also be a concern. Selling thousands of tons of gold quickly without crashing the price is a formidable challenge. Another risk is geopolitical. The world's largest gold trading and storage hubs are concentrated in a few locations, such as London, New York, and Zurich. Many countries, including those that may have strained relations with the West, store a portion of their gold reserves abroad in these financial centers. This creates a risk of seizure or sanctions. In times of geopolitical conflict, a country could find its overseas gold reserves frozen, rendering them useless. This was seen when the US and its allies froze Russia's foreign reserves following the 2022 invasion of Ukraine. This has prompted many countries, including China and Turkey, to repatriate their gold, bringing it back to be stored within their own borders to mitigate this risk. Finally, a focus on gold can distract from more pressing economic fundamentals. A country's long-term prosperity depends on productive investment, technological innovation, a skilled workforce, and sound economic policies, not just the size of its gold hoard. Overemphasizing gold can create a false sense of security, diverting attention and resources from the reforms needed to build a truly resilient and dynamic economy. For a nation, gold is best viewed as a form of insurance, a valuable component of a diversified reserve portfolio, but not as the engine of economic growth. Relying too heavily on it is like living in a fortress while the fields outside remain unplowed. In a world increasingly dominated by digital currencies, complex financial derivatives, and intangible assets, the enduring appeal of a simple physical metal might seem paradoxical. Yet gold's importance in the 21st century remains as strong as ever. For nations, it continues to be the bedrock of central bank reserves, a strategic asset that offers protection against currency devaluation and geopolitical shocks. The ongoing trend of central banks, especially in emerging markets, adding to their gold holdings underscores a global shift towards de-dollarization and a desire for a more multipolar financial system. Gold is the neutral, trusted asset in this evolving world order, a silent anchor in turbulent economic seas. For individuals, especially in countries like India and China, gold's role is even more personal and profound. It is not just a hedge against inflation, but a vessel of cultural heritage, a symbol of prosperity, and a tangible form of savings passed down through generations. In an era where digital bank accounts can be frozen and currencies can lose value overnight, the ability to hold a piece of universally accepted wealth in one's hand provides a unique sense of security. This deep cultural and emotional connection ensures that personal demand for gold will persist, acting as a steady, foundational layer of the global market, independent of the speculative whims of financial traders. Scientifically and technologically, gold's unique properties guarantee its future relevance. As technology advances into new frontiers like nanotechnology, advanced medicine, and space exploration, the demand for gold as a critical industrial component will only grow. Its unmatched conductivity, durability, and biocompatibility make it irreplaceable in many high-tech applications. From coating the visors of astronaut helmets to protect them from solar radiation, to its use in life-saving medical devices and the sophisticated electronics that power our digital world, gold is quietly enabling the future. Its role in innovation is as vital as its role in finance. Ultimately, gold's continuing importance lies in its dual nature. It is simultaneously a high-tech material and an ancient symbol, a financial instrument and a cultural artifact, a public asset and a private treasure. It is a constant in a world of variables. Its price may fluctuate, its mining methods may evolve, and its role in the monetary system may change, but its fundamental value, derived from its scarcity, its physical properties, and the collective trust of humanity, remains undiminished. From the stardust it was born from to the vaults and homes it now resides in, gold's journey is a reflection of our own, a timeless quest for beauty, security, and permanence in an ever-changing world.